Good evening, traders. This is ICT with the Pro Traders Club entry for March 15th, 2011. Okay, we have our chart set up for last night going into a new trading day. Our vertical line in here delineating a New York midnight time. Alright, this red line in here is the 161 figure. And the reason why I took the two longs initially was number one, we traded to the figure, traded up, and then pulled back into an optimal trade entry in here. I went long, and as price began to break above this high in here, what I was hoping to see was a try to pull up to at least a retest of the R2 from the previous day. Price, when price moved up here, I moved my stop to break even, and this move down here stopped me out, which set up another optimal trade entry, and low to high. If you run your fib on there, we will in a second, but for the sake of explanation, we'll just move from here. I was again focusing on the 161 figure, and also, not that I use trend lines in my trading, but you can see that there was a likelihood of trend line players possibly taking this as a means of support. We had an old consolidation area in here, and price moved up on in here. I took 23 pips out of this move, and then moved the remaining portion to break even, which in here was stopped. Now, this low in here, this low actually was the area I was hoping that we would see it push through, and unfortunately the trade didn't pan out as I had hoped. So in the dealing range low here was traded back up to as resistance. It provided the catalyst for the market to drop lower going into the London Open. And since my analysis for the London, pre-London actually, wasn't accurate, I had to allow the market. Actually, in hindsight, looking at this would have been a really nice nice short in here after blowing out the stops on anyone that was trading short in here. They gunned all those out and plunge. So I was incorrect on that trade. Going long in here, what I was actually looking for, if we could break above this level in here, find support, I was looking for a possible break to previous day's high, and maybe even reach for the 162.20. So that was the swing I was calling in the chat room. Obviously the market broke down, and even though I didn't catch the actual move, I was able to profit and mitigate any loss. First stop was at break even, and the second trade, like I said, 23 pips was taken out. But as the market broke down, we slipped into a buy region, much more suitable instead of just trading right at the central pivot. Okay, we have MS1 in here. We have a potential optimal trade entry in here. Had you looked to go long here, again, same scenario I encountered here, broke down and it would have stopped you out. In the chat room, once this market broke down here, and I had already missed the move, I basically went to bed, basically, and was looking for the New York open as a potential opportunity for me to get some pips. Okay, so going into New York open. Okay, we traded down to MS2. Okay, in here, mid pivot between S2 and S1. We have a low, traded up to the S1 level, tried to go lower, was unable to do so. Optimal trade entry in here. Price trades it back above S1, finds support, moves higher, level in here, potential area for stops that it's going to raid, and they're gone. Okay, and trades back up to approximately the 161 figure, but basically they're just finding resistance at this low here. And now we trade to the 161 figure. A couple different times trading up to it, and it went into consolidation as to where we are right now. Okay, that was the recap for the cable. Now let's take a look at the fiber and how it unfolded this morning for me in New York. Okay, we have the fiber, Euro versus USD, and New York midnight time. Price trades up to central pivot, slips down, blows out the low from the previous day, trades up to almost the central pivot, and we are in the London Open. Again, I was not trading the fiber, but we had a optimal trade entry, and I believe Alan, which we know as App Monster on the thread, citing he had some action in that, so that was really cool. Way to go on that. Okay, now here's the setup that I woke up to this morning. We're going into our kill zone, and we have a low and a rally up and then retracement. Now, looking at how to draw the fibs, this is for a newbie trader from Baby Pip's thread. We're in the buy zone, okay? To run the fibs, you want to see a reaction low, the market trade in the direction you want to trade in. In other words, if you're going to go long, you want to see a move, okay, in that direction initially, and then it's going to pull back. Okay. In this instance, we're going to use the low here. I'm going to plot it up to this high in here. Price trades down right into optimal trade entry. So we have time and day, which is New York Open. We're in the buy zone. Let's squeeze this down a little bit more. Okay, we're in the vicinity of MS2. Also note we are trading at previous day's central pivot. Okay. Price moves along. First objective, taking it out 30%. Okay. Right in here. Right in here. Areas of what would be considered stop pockets. Up above here as well. So as the market traded lower, anyone that was trading as a trend, they're just going to bring their stops down to the next reaction high, trailing it along. Well, the short squeeze today on that blew out all of those stops. Okay, now I had an order to cover my long at 139.65. So entering at 138.65, move up to 139.65, and allow me to exit right in here. Now initially, I have to tell you, I did think that I caught the high of the day, and it felt pretty good because it was an exact 100 pip move. But then price moved down, retested central pivot, and it showed me how smart I was, and went up even higher. And eventually I actually traded to the 140 figure. Okay, so while I did not have the entire move, given the scenario that we've had in Japan and the uneasiness that we've experienced in the market, all in all, it wasn't a bad trade. You can see that the levels that had I held on to it, the way we have our fib tool calibrated, you can see that it was able to call the general area where the fiber was able to get to today, and also notice how it was trading off of those levels, and it really hung on to this fib level here. Okay, wild day. I hinted at in the chat room last night on Baby Pips that it was going to be a crazy train because we had a huge Asian range, and whenever you get a really wide range on Asian, it's a precursor for a pretty volatile London session. So stick that in your toolbox as a future reference tool. And let's go back real quick and look at why I was looking at this, not simply because it was trading at the S1, but let's look at why on a longer term time frame, why it was a really good buy. Okay, this low in here. Okay, let's get the fib out for a moment. All right, we have a low of 138.53. Okay, so let's go to a 4-minute chart. 4-hour chart. All right, we have a very naked fiber chart here. All right, and what we're going to do is we're going to look at I apologize, 1 second, guys. Okay, we have our 4-hour chart loaded up, and see this high here? Let's drop a line on it. Okay, notice how we bounced here, got below it, broke through it, now it traded back down into it. That should be resistance. Okay, so let's go down to a 1-hour chart. Fine tune that line just a little bit more. Okay, on this high here, all through these lows, consolidation, trade down to it here, and moving down to a 15-minute chart. Okay, price trades down to that same level. Now notice, unless you're looking at the higher time frame, would you have noticed this key support resistance level? Probably not. And that's the importance of having the higher time frames in perspective. Okay, now we drop it down to a 5-minute chart. Okay, when price traded down to it, note also the time of day. Okay, London, London open in this vicinity here, trading down into New York open, okay, which would be starting right about in here. So we have price trades down to this key support level, bounces initially. Okay, now let's look at the swing in terms of pips. Okay, the initial bounce was 55 pips. Okay, see the 55 right there. If I move higher, it goes 57, 58. Keep your eye on that right there. All right, so we have an initial swing of 55 pips. All right, so 60% minimum of that. Yeah, that's certainly worthy of catching 20 pips out of that. So even if we buy the optimal trade entry in here and it trades right back to this level here and falters and fails on us, it'll allow us at least to take some profits out of the market. And 20 to 30 pips is what we're looking for initially to pay for our time in the market, and that would have been prudent right there. Now let's go back to the left side of the swing. So when we traded down to that low here and bounced off key support from the higher time frame, the swing prior to that going down, let's measure that one. Okay, 86 pips. Very, very good. That's a very nice swing. So again, also, if we buy the optimal trade entry and we get above this high here and only trade up to this point, 60% of 86 is still a very handsome amount of pips as well. So that's how we want to do our swing analysis and determine the probability of is it a low risk, high probable trade in terms of what can you expect to make out of it. Reward the risk. And you want to have a high reward, low risk ratio on your trades, and this is how we quantify that. So looking at the fib, okay, when we trade down, we look for a reason to buy. We don't just buy right in here. Okay, you can do that. Now, when we trade the overlapping fibs and trend trade, that's how you trade that. But for optimal trade entry in the pivot zone trades, you want to wait for it to trade down, bounce in the direction you want to trade in, and when it starts to pull back, you have your fib on. Okay, optimal trade entry in here. Okay, 138.65. 10 pips below this low in here, which would be 138.43. And obviously, we were using a 30 pip stop. It would be in 138.23 region. So, but you can see obviously by drilling down to a 5-minute chart and looking at key support resistance levels, you can keep your risk a lot tighter than 30 pips. But price moved on up, and this level in here again was where I was anticipating stops to be ran. It did pull back a little bit and then ultimately moved even higher. So that was the move for the fiber this morning, and how we utilize the longer term time frames for a key support resistance level. So that's that, and I will absolutely have a link posted on babypips.com and my blog. Not tonight. That's had other things I had to take care of tonight, but the link will be posted on there for Sunday's webinar, and it's going to be about an hour long, and I'm looking for approximately it's going to probably be around 1 p.m. my local time, which is in New York Standard Time. So if you can make it, great. If you can't, don't worry, it'll be recorded, and we're going to basically talking about how we go into the trading sessions each day and how we prepare for ourselves, and what homework we should have done going into the session, and how to find these levels like we're doing right in here. Okay guys, and with that, I wish you good luck and good trading.